Good afternoon. Thank you for joining us. My name is Hesser. I'm the Chief Strategist at Kroll Bond Ratings. Those of you that may not be familiar with KBRA, we're the fourth largest credit rating agency in the US. We were founded 11 years ago in the wake of the global financial crisis with a mission of restoring trust and transparency to the ratings business. Our goal is to set a higher bar for analytical rigor. That means challenging conventional thinking, being steadfastly forward-looking in our rating determinations, and resisting one-size-fits-all models in favor of thorough evaluation of management. Our approach has resonated powerfully with investors. Today, we've issued 46,000 ratings, I think, by our last count, on $2 trillion of debt. We're active across the asset class spectrum with leadership positions carved out in asset-backed securities, financial institutions, aviation and transportation, and public finance. And as many of you know, we are quite active in Bermuda, rating a number of insurers and reinsurers, where we have a very different approach to rating reinsurers than our legacy rating agencies. And we also rate the largest independent bank on the island, as well as the sovereign credit. All right, on to our topic, ESG and tech, the evolution of sustainable development. Now, somehow the BDA has combined, in my opinion, the two most influential forces driving markets today, technology and ESG. And at KBRA, every credit we rate gets passed through these two filters, which forces our analysts to think not only about a credit's vulnerability to things like climate change, cybersecurity, and changing stakeholder and customer preferences, but also technological disruption. It's not just a negative filter from our perspective, but there's also great opportunities that come with that. And those are the kinds of things that we think through. So those firms or governments that get on the right side of these issues will be well positioned, in our opinion, to flourish. So our panel today gets at the heart of these issues from a place, Bermuda, that's well positioned to capitalize on these trends. We'll explore how the island can build on decades of experience in becoming the global center of natural catastrophe insurance and reinsurance to play a similar role in business developing around climate change. We've assembled a panel of experience and expert perspectives to explore this topic in greater detail. Let me introduce our panel and have them tell you a bit about their role here in Bermuda. Let me start with joining us on the panel today, Darren Wolfberg, CEO, Blockchain Triangle, Steve Weinstein, Chairman of the BDA, Gina Pereira, Philanthropic Fiduciary Director at Meritus Trust, and Charles Thresh, Managing Director of Kpmg. Darren, why don't you tell us a bit more about your background?
Yeah, thanks for that. And thanks to everyone for being here today, and happy to be representing Blockchain Triangle here with you. So Blockchain Triangle was a company that was started 3 years ago in Bermuda. And we went through the licensing process to become a DABA registered entity under the Bermuda Monetary Authority. We've passed that. But when we think about the opportunity and kind of, our backgrounds and how that fits for what we're doing, I started off in technology at Sony developing products for them, then moved into their venture capital group as a technology analyst, then to business school at University of Chicago, to Morgan Stanley, almost 10 years on the institutional equity desk at Morgan Stanley. And then BNP Paribas, where I managed cash equities, program trading, electronic trading, and futures execution. And then my worlds of technology and financial services began to blur, and we started Blockchain Triangle. And we started it to become a registered entity, as I mentioned. But then in our process, we essentially settled into this really unique niche, and that is this intersection of ESG, climate, and financial securities. And we are commercializing a really unique piece of technology that takes smart meters and IoT devices and connects them directly to a digital security. And therefore, end stakeholders, whether they're an investor, a credit rating agency, an insurance company, can see real-time information on the performance of the underlying assets, what is the climate impact, and what is the economic output of that asset. So we're very excited to be here and looking forward to a really robust conversation.
Thank you, Darren. Steve, how about yourself?
And thank you, and thanks to my fellow panelists for being with us today and supporting the BDA, the support and outreach. Began my career on Wall Street doing M&A, private equity, and capital markets work, and from then spent 2 decades at a Bermuda-based financial services company that was renowned for its underwriting and approach to climate-driven natural catastrophes. I stepped down from that at the end of the last year, and I'm very privileged and honored to be serving as the chair of the BDA. Our mission at the BDA is to promote the sustainable, equitable prosperity of Bermuda, in part by recruiting investments, capital, and jobs to the island. And we achieve that in part by taking our message on the road and reminding stakeholders that we want to support your success. We have a range of initiatives underway that we're very committed to, but no initiative is more important to us than our pursuit of our aspiration to establish Bermuda as the world's climate risk finance capital. And as you noted, we're building on our 3 decades of expertise in natural disaster reinsurance, much of which is climate driven. This is the adjacent vertical as this emerging new hub, climate risk finance, establishes itself. There will be expertise all over the world, but there's no better place in the world to raise capital for and operate and domicile a global B2B tech-levered financial services company in Bermuda. We're really thrilled to be part of this conversation. The culture of Bermuda aligns so well with ESG strategies, and we're really happy to talk about that with our viewers today.
Thank you, Steve. Gina, how about your background?
Hi, Ben, and thank you to everyone for the opportunity to join this panel today in this discussion. I've been speaking on ESG more and more above any other topic that I'm called on to talk about these days. So it's really demonstrative of how timely and critical it is and how important it is for Bermuda. So thanks to the BDA for the opportunity to participate in this discussion. My background is a little bit varied. I have a legal background as a trust and estates lawyer, as I've worked through that for many years, and in private practice, but also in-house, joining a large wealth management firm in Switzerland for 7 years. And then about 11 years ago, I saw a need and opportunity to work with the same group of high net worth private clients on their philanthropy, on their sustainable investing, and their impact investing practices. And that has evolved and grown since I started that. And there's increasing interest, which is in this topic, particularly driven by the pandemic. So today I joined Meritus Trust Company, which is a fiduciary service provider in Bermuda, just earlier this year in March, and to bring advisory services to our network of clients, our private clients, their families, around topics of sustainable ESG investing, impact investing, and strategic philanthropy, and how to sort of meld those principles of stewardship into like an overall wealth management process. So that's the perspective I'm coming at from today.
Thank you, Gina. And Charlie, tell us about your background.
Hi, everyone. And yeah, it's delighted to be here alongside such an esteemed panel. I have the honor of leading KPMG's advisory practice here in Bermuda. I'm an accountant. I've been in private service for over 30 years. But most relevantly, I lead the impact proposition here for KPMG. So I have 40 people in advisory. A good few are focused now on impact and ESG advisory work, both from a strategy perspective, from a reporting and an assurance perspective. So yeah, very, very on point, totally well timed, and look forward to contributing to the debate.
Terrific. Thank you, Charlie. All right, so let's kick off the discussion a bit here. A lot to unpack on these two topics and where they intersect. Steve, let's start with you. 2 decades of experience with RenRe, your leadership role at the BDA over the past 5 years really gives you great perspective as any for assessing the continued evolution of Bermuda as a hub for innovative tech-enabled financial services. As the investing world demands E, as in environmental impact-related data, talk about the advantages that Bermuda has as a player in this space.
Thank you, Ben, and that's a great question to tee us off. Let's begin 4 centuries ago. When we think about E, we can think about Bermuda's 4 centuries of environmental legacy. The first conservation statute in the Western world is 1623 in Bermuda, protecting sea turtles. The island is so beautiful today because for 4 centuries, Bermudians have protected and cared for our waters, our lands, and our ecosystems. And that's why we can have the per capita density that we have combined with the physical beauty. On top of that, for 3 years, as we've discussed, we've been building successfully this enormous market presence in climate-driven risk understanding. On a pound-for-pound basis, on a per capita basis, as it were, there is no jurisdiction in the world where you can combine as much climate-related expertise in professional services like Charlie's firm, in the legal field like Gina's, or in the application and matching of risk and capital as you can in Bermuda. That permeates our entire business culture. There is no regulator in the world with as much expertise in overseeing how climate risk resides on a regulated balance sheet as we can see in Bermuda. And importantly too, our culture of innovation is going to be very important as we try to bring new solutions to address the accelerating risks of climate change. We know the old solutions don't work or they don't work sufficiently. The climate-driven protection gap, which is resident, I think, Van, in your ratings, it's important, it's growing. Traditional solutions will be important, but innovative solutions will be part of how we close the protection gap. Bermuda offers as well, in addition to the expertise we see resident in our regulatory scheme, an embrace of innovation, but importantly, focus. As we talk to people and invite them to Bermuda and invite them to let us help accelerate their success, it's fascinating the types of blue water strategies, innovative strategies we hear about. Are some of these strategies insurance or banking or financial guarantees or warranties or consumer credit or maybe some mix of all of the above? In the United States, there is a federal regulator focused on climate for each of those verticals. In Bermuda, we have but one. It's sophisticated, robust, and pragmatic, but there's only one door to knock on to see if we can bring your product to market in an effective way. So we have many advantages, but some of the key ones, and I'd say the most important thing I'd leave you with is we want to help you succeed in climate. It aligns so with our values, and it aligns with the existing market in a way. All of that will come together and help further your success.
Terrific. Thank you for that perspective, Steve. Charlie, let me throw it over to you for a sec. You know, you bring a global perspective to your Bermudian clients. What are you seeing in terms of international developments in regulatory, investor, and consumer sentiment to ESG, and how does this affect Bermuda?
Yeah, I think, I mean, the world is constantly changing and never more so at the moment. I think there's a confluence of factors really across ESG that's driving change. Perhaps the most preeminent, as Steve has indicated, is climate change. Because, I mean, increasingly it's seen as a survival factor for all of us, life on Earth. I think the discourse on climate change, though, is dragging other elements of ESG into the spotlight. I mean, everything, how we deal with waste, you know, the use of natural resources, taxation and tax morality, business ethics, how business treats employees, our role in community, diversity and inclusion, and you know, how we structure and govern ourselves as business. You know, and also today I was reading I just took a look at Insurance Day. You know, these are some of the headlines just from one day. Insurers to take a bigger role in the US flood market. Reinsurers underestimating nat cat risk by up to 50%. The insurance market must not just walk the talk about diversity and change. If it's to survive in this new and emerging world, it needs to walk the walk. You know, pick any day, the coverage of ESG, the environmental, the social, the governance, it's always there. And stakeholders now are really taking notice of how business is dealing with these ESG pillars. The impact of the above on risk and return is now being picked up by regulators, by investors and analysts and lenders. Employees are looking through the ESG lens when they're considering which employers they want to work for. And consumers, both corporate and private, are increasingly making choices about who they buy from based on ESG criteria. You know, Bermuda's sat in the Atlantic world of trade flows for centuries. And Steve's indicated that. Now really it sits at the center of risk flows in the global economy. And it's also got to play its part in ESG and in an increasingly digital world, which is part of our focus today. So Bermuda is far from insulated from these global trends. Not only is it physically exposed to climate change, but also it's at the epicenter of global business trend. Of course, the largest business sector in Bermuda is international business, and the largest component of international business is the reinsurance sector. So it has particular exposure to climate change through the business it underwrites. It has to consider physical risks, its liability risks, transition to a greener economy. How does that affect the risks that its clients are writing? And then, of course, asset risk and investment decisions. These are all being impacted by ESG. Management's focus really has to balance these exposures versus the premium it writes on the income and the profit side. But it's operating in an increasingly global and competitive world. So it has to stay relevant while being competitive. And it ultimately has to deliver what the consumer wants. So all of these things really, they're all mixed up from the, if you like, from the business side, but regulators are also starting to notice. They're starting to try to understand how the consumer is affected by these increased risks, and how providers of risk coverage are dealing with that. And of course, as well, I'm sure we're going to come on to talk about, there's a harmonization, there's a diversity of regulatory approach to ESG and particularly climate risk, but there is a move towards harmonization. And so, it's a large and complex topic at the moment, but it's one that Bermuda businesses have to focus on, just like their global counterparts.
Yeah, very much agree, Charlie. Thank you for that perspective. Darren, let's go over to you for a second. You've been on the cutting edge of tech-enabled financial services for some time now. You've chosen to place your business, a platform for digital assets, within the Bermuda regulatory framework. What's behind that decision, and what makes Bermuda an advantaged place for blockchain triangle?
Well, thanks for that, Van. Great question. And really, when we went through the process of figuring out where we want to go for this next generation of finance, and moving from traditional finance to digital finance, there were options like Gibraltar, there were options like Malta, Hong Kong, Singapore. Me living in New York, it was actually a very simple decision from a logistics standpoint, but practically, and more importantly, from a regulatory standpoint, we really needed an ecosystem where there was a high level of credibility for all participants in the traditional finance ecosystem, a place where they were familiar with, they know companies that are there. It was a significant hurdle for us to figure out what was the right jurisdiction, and Bermuda was it. And really, when I think about what's going on in the US from a regulatory perspective, I actually feel great about my decision, having made this decision a couple years back, because I don't think the US is any closer to solving their digital asset ecosystem in a robust way. And when I think about what Bermuda has in place, they passed two pieces of legislation. One is called DABA, stands for the Digital Asset Business Act. It is a very clear and consistent piece of legislation that actually mirrors a lot of what you would find in traditional finance. So where you would have service providers and stakeholders in this ecosystem, they have a swim lane of activity that they're allowed to participate in. So one's execution, one's custody, one's exchange, so on and so forth. And that's very consistent with the traditional finance world. So having counterparties that have managed risk and managed liability within a specific swim lane is exactly how you would want to see a regulatory ecosystem structured and created. When we think about digital finance and comparing it to to traditional finance, there's just one core key innovation that we see, and that's blockchain. And that's being able to take the cap table that you would traditionally see held at a DTC, a Euroclear, and really transition that to a smart contract, whereas people buy and sell, that smart contract is updating the cap table real time, which brings real-time settlement, which also gives you a lot of ability to manage risk if you are a prime broker or a custody bank. One of the other things that that does is it creates a pathway of connectivity between that issuer and that investor. So if there was information as per the performance of an asset, whether that be a solar farm, a wind farm, an EV charging station, an investor in this asset can now see all that information real time. And what it means is that they'll be able to see how many RECs are created real time. And when you think about all of these portfolios across all of these asset managers that have many private assets and many public assets, this is a way to provide data at a granular level in a portfolio view where now those asset managers can say, you know what, I know what's here. I know that they generated this many RECs. I know that they just generated this much outcome off of carbon offset. So from that perspective, it really made a lot of sense for us to choose this jurisdiction. And really that was the springboard that kind of, jumped us into going into and presenting at COP26 in November, which we're very excited about, to be one of the few Bermuda companies to present there in a global audience. I don't think we would be there unless we started in Bermuda.
Well, it's fascinating tale, Darren. Thank you for that. Gina, if we go over to you for a second, the explosive growth of ESG, it's kind of the Wild West out there in terms of big data vendors jumping into the fray. All of this, we hope, or market participants hope, will settle down over time. But from your position as an advocate for high net worth investors, what's your impression of the integrity and usefulness of the ESG related data out there today as it stands?
Well, over the past decade or so, I've observed that the data that's available for ESG metrics has grown exponentially, and it's growing, it's continuing to grow and to improve. I mean, if you look at it from an investor perspective, we need comparable data and we need significant data history. There are still gaps, but where you can find increasing amounts of information available is with large multinational corporations that are based in developed markets. You know, investors can find a lot of what they need from there. Where there's still a lot more room for improvement is with the mid and small cap companies that do not necessarily have the same resources, personnel, and budget that the larger firms do to be able to invest in, in marketing, to engage with investors, or to have the resources to track the ESG data. I think, though, that as ESG disclosure standards gain more and more traction, the data that's supporting ESG will only improve. But I do want to make mention that data is no substitute for good judgment, right? So good analysts and portfolio managers exercise judgment all the time to fill in gaps where data is not available. And ESG is no exception to this. We've seen a lot of investment in firms developing their skills in-house to better understand ESG issues, not only to acquire data, but how do we use it? I mean, you can have a plethora of data, but if you don't know the right questions to ask, you don't know what to look for, it's going to be limited to its use. So knowing the industries and the companies in which they analyze, this isn't new from an investment analyst perspective, but the good ones are the ones that are going to be able to take that data and which will enable them to exercise better judgment, even if they lack access to every piece of what they want. Like, can we get to enough of the story in order to make informed decisions? And I do think that it's going to continue to improve the availability of data, the quality of data, but as data is required by investors to make good decisions, I think similarly, the data needs good judgment in order to be able to understand how to use it. So it's an inextricable combination of both.
Great, thank you, Gina. Charlie, back to you for our next question. You now headed up Kpmg's Bermuda ESG Advisory Program Impact. You referred earlier to the changing regulatory, investor, and consumer landscape around ESG. What do you think is the greatest challenge your clients in Bermuda are facing in responding to this dynamic?
Well, I think Gina had it right. You know, the focus is very much on the data, and what gets measured gets managed. And I think that also the data I come from an auditing world, and data is effectively, financial data is at the heart of investors understanding what their investment's worth or what their potential investment may be worth. And I don't think ESG is any different. The great struggle has been for management teams after they've devised their ESG strategy, and maybe I'll come back to that in a moment, but they need to be able to demonstrate, how they're getting on with their strategy, how much progress they're making against their milestones, and data is at the heart of it. And one of the most significant challenges our clients face is bringing together disparate existing sources of data together with new sources of data, because there are new metrics involved in ESG, and bringing those into a coherent whole, both for their own purposes. So our clients get involved in challenges around dashboarding, data integrity, understanding what the data means, and then on the other side, being able to demonstrate to people who read that data outside the organization that it's robust, that appropriate controls are over that data, and it presents an honest and fair view of the ESG landscape. So the data piece is absolutely fundamental to it. I mean, I guess I'd say also before that, the piece on strategy. Many of our clients, in fact, most of our clients have already got a sustainability strategy. This has really been something that's been going for a number of years now. But bringing that together as a holistic strategy that deals not only with the environment and sustainability, but social engagement with community, and how they exercise good governance in business. Bringing together all of those things into one coherent strategy. And it has to be compelling, because at the end of the day, as I said earlier, consumers are making choices about how compelling businesses' ESG strategies are. So there has to be a degree of sales in it, but it has to be underpinned by good, solid data. So there's the strategic piece, there's the reporting piece, and as I mentioned, organizations like mine are not only now starting to if you like, turn from the poacher to the gamekeeper, and try to provide assurance that what businesses are saying they're doing in the ESG environment and the data they're providing is supported. I also wanted to say KPMG as an organization really started this from the inside. We have our own, as you said, impact is our internal plan, and it really started by bringing together all of our sustainability and social engagement and governance under one umbrella called impact, and really by exercising our own consulting skills internally and being able to demonstrate to our stakeholders, which in effect are our partners and our staff, as well as regulators, how well we're doing on our assertions around impact has really allowed us to harden our skills for bringing to the clients, and that's the cycle I've been through as leading our impact here in Bermuda, is really bringing together all of our internal threads, which make us compelling as an employer to our clients, and hopefully offering a compelling client service to our clients. So that's kind of the cycle that we've been through, and it's also what I see that our clients are going through as well.
Yep, I think this is gripped the world for sure. You've got to figure out a strategy for how to incorporate and respond to this. It's in some ways unlike anything we've seen before. Steve, I wanted to pick up on something that Darren was talking about, and that was, how nimble I think the Bermuda regulatory framework can be, in part because of its heritage, but also because it's the moving pieces. They're probably easier for collaboration and coordination to take place. I assume that means that the growth of the financial services business from a technology perspective, incorporating all the ESG factors we're talking about, you've got to have a public-private partnership to bring the best outcome out of all of this. Talk about that public-private partnership existing in Bermuda and how it's been beneficial to certainly building the island and its financial services prowess.
Yeah, thank you for that, Van. And Darren, thank you for all your comments. And I'll say they really resonate with me and I'll endorse them. It sounded very familiar. In the same dynamic that supported Darren and his competitors launching blockchain-enabled new solutions is very similar to the dynamic in the early 90s when Bermuda companies pioneered the use of stochastic modeling and liability portfolio optimization to bring new solutions to the reinsurance business. The art of the possible is always very possible in Bermuda. And it combines almost uniquely a rare degree of stability with an extraordinary amount of agility. And those are two characteristics which rarely come together. The ecosystem and culture which supports that also involves a robust relationship with a feisty, independent regulator that is also sophisticated and pragmatic. I would say the key is that the lines of communication are always open, and the commitment to being aware of and supportive of innovation when valid to do so, always with an eye on maintaining the blue chip reputation of Bermuda. We will always keep our promises. We will always be a responsible player on the global stage. We'll always be a leading member of the community of responsible nations and jurisdictions. But we want to be open for innovation. And it's that ecosystem that permits information to flow and decisions to be made nimbly. Across my career, I've gotten what I wanted from the regulatory authority 85% of the time. And I've only asked for things that I thought they ought to grant. But the key was they got back to me quickly. And then we could engage. You can be in limbo for years in other circumstances. And in Bermuda, we are committed to delivering answers and listening to your feedback as rapidly as is possible. And at the BDA, we will help. If you need someone to complain to gripe to, or to brainstorm with you to find a way to make your solution more palatable, we want to work with you because, again, your success is our success. While we're looking at the big stage for financial services, I also want to focus for a moment on helping innovators to find a platform to experiment on. We call it Project Beta Test. Bermuda is not a big market, but in some ways that's very valuable because we can offer a beta test, very clean data. There's only one port, there's no town next door. And Bermuda is a very tech-forward, innovative culture. And if you have a product or service or idea where you want to get licensed to experiment, get your permit to launch, and speed to market matters to you, we might be able to help you with that as well. So small market, but really intriguing to deliver clean data for some sorts of products and services.
Great, thank you, Steve. Gina, let's go back to the idea of data for a second and technology. And I suppose, the world of big data, in some respects, helps you probably get at one of the things that I would think is most important in your business, and that is reputation risk. So talk about a little bit about how you can advise your clients from a philanthropic perspective, and how technology has helped make that a bit easier for you.
Well, I have to say that I've seen reputation risk grow over the past decade or so to an extent that I may not have even been foreseeable when I graduated from law school, and the World Wide Web was quite nascent. But before the internet, we had scandals or indiscretions would only be mainstream if they broke national media, so television or newspapers. But in today's environment, everything is exploded. It's recorded in real time. There's a much larger audience for it to be displayed, and it can expand the exposure and the negative impact of the original incident, like beyond our imaginations. And so from my client's perspective, these are concerns that they have with respect to how they run their business. I mean, their own family businesses, how they're affiliated with, the companies that they invest in. I mean, particularly if they have large controlling shareholdings, what about, their association there? On the philanthropy side, the association with the charities or the individuals that are behind those charities or what those charities do is also something that can contribute to reputation risk. And so what's key for us is transparency, right? And how do we get access to that transparency? I see technology really being able to and has been driving this forward for us so that we can do our KYC, in this case, not know your client, but know your charity in a way that it reveals more than we were able to 10, 15, 20 years ago. And also to be able to stay on top through monitoring. One of the the challenge is if you are associated with high profile individuals, and in my world, a lot of our clients can be high profile in the jurisdictions in which they come from. And if there's an association there that, like the example that comes to mind, J.K. Rowling, got into some trouble earlier because of some comments that were made around transgender and gender association. And we've been looking at supporting from one of my clients a while ago that same organization that she had set up. So it would not have been a fortuitous match, and frankly didn't happen. But these are all things that we need to be mindful of. One thing that I am really excited about on the blockchain world is the opportunity for cryptocurrency to be used to support charities, but also for donors to see the traceability of exactly how funds are being spent all the way down the chain on a real-time basis, and do they reach their intended targets? I mean, the FATF, the Financial Action Task Force, has been raising concerns around anti-money laundering and the use of charities to facilitate money laundering for terrorist financing purposes. So blockchain is a really great potentially tool for us to use to be able to assure that there's accountability, not only insofar as misappropriation, but just, the money where it was supposed to go. So, for cross-border giving, especially when you're dealing with developing countries, I think blockchain has a really great opportunity for us to address these concerns and also to mitigate some of the risks that we're seeing with bank de-risking practices as a result of dealing with sensitive jurisdictions and the consequential difficulties in getting funds transmitted abroad to sensitive jurisdictions. So there's some exciting, I think, opportunities down the pipeline.
Great, thank you, Gina. Darren, let me go back to you for a second. And you mentioned COP26. I guess we're up to 26 now. Is coming at the end of October in Glasgow, United Nations Climate Change Conference. What are your expectations of developments coming out of that? Is that going to be something? Is it going to be sort of a landmark moment for climate change and ESG? What are your expectations coming out of COP26?
I wish I had a crystal ball. It's really, I would start there. I think that I think a lot of the stakeholders are now really well educated on all of the factors that are at play, and I'm hopeful that that all of the stakeholders are able to put down pragmatic solutions that put us on the path and put the process in place to really solve the problem that's in front of us. And really, some of the things that I come back to, thinking about examples of this and data points that can be used to help steer and manage the conversation. So one great data point: for every unit of carbon that a bank produces on their balance sheet or in their bank branches, by their bank branches or in their bank offices, their balance sheet and their loan book has 700 times as much carbon impact. So the question I would have: how are the banks managing this? And really, there's been some great work that I'm sure you're familiar with, Van, at this intersection of sustainable loans and incentivizing climate compliance. So you have both a carrot and stick to encourage this type of activity. It also provides the framework to limit greenwashing, which I know is increasingly a factor amongst major investors, because at the end of the day, I come from the traditional trading finance world. And when you do a trade, you get a trade confirm. And that trade confirm gives you size, price, notional, commission, and they're all specifics. Nothing can change. Nothing is 80% of what the number is. They are hard numbers. And I think that's where we need to get to, because ultimately math solves this problem. So here are a few examples of how this is playing out. So we're working with a number of, we were actually, in addition to being one of 26 to present at COP26, we were also selected for the CivTech Alliance. And the CivTech Alliance is governments that are looking to use new technology to increase resilience, to increase planning. So when there are natural disasters, they have the right planning, both for remediation of the event, but also in having the right infrastructure for their goals in the future. We have a corporate client, very large in the F&B space. They're looking to baseline and benchmark where they are today and where do they want to be in 3, 5, 10 years, and how are they going to get there? And really, I think the important thing is, unless you have the data, you can't have an honest conversation on the problem. And that's really where we come from. It's all about the data. So between data from baselining and benchmarking, and that resulting in data disclosure, Reg FD, I know the SEC is looking at that very closely. And I know every compliance officer and every CFO at every large company is thinking about, well, how are we going to do this? So that's one aspect. The second key aspect that I'm excited about and how we're seeing this play out is really in the efficiency of capital for these projects. And I think that's a place where I think we excel at, being able to take multiple subscale assets, bundle them together into larger offerings so that cost of capital can come down. One of the big things that you're seeing in distributed energy resources is it's about the network of assets, not about that one large coal plant that's going to deliver the power for the island or for the municipality. So from that perspective, we're super excited about what's to come in the future. We think we're in a great spot. We think we've got great tech, and we're really looking forward to working with great partners, not only some of them on this panel, but beyond elsewhere.
Terrific. Thank you for that, Darren. I think we are bumping up against our time allotment here. So let me thank our panel today. Darren Wolfberg, Steve Weinstein, Gina Pereira, Charlie Thresh, thank you very much for your insights, your wisdom on these topics. These are powerful forces at work. Darren, you mentioned, you're right, following the money is always a good thing to do, and hopefully our policymakers will be enlightened as they set up incentives to sort of move the needle in the right direction. So again, thank you all for contributing today. With that, if I could ask everyone to join us as we continue our discussion and conversation in the Q&A session. Thanks again for attending today.